Good morning, treasurers. This is your host Parthesh Shah from Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 28th February 2022 in the international market. US Treasury yields dropped sharply in last 1 week as investors flocked to the safe haven assets of government bonds. US 10-year trading below 2% at 191. It seems US 10-year found support in this geopolitical action, but Fed meeting is on its way. Non-farm payrolls will approach this Friday, followed by CPI next week. There are enough reasons for volatility. In the crude oil market, crude is trading at $102.80 per barrel. Short-term range for crude is 99 to 105 as there is a volatility. Knight research team's fear of geopolitical issue has worsened and India is going to get hurt really hard. According to SBI reports, if the crude oil situation persists and crude trades at $100 per barrel, India will have to pay rupees 90,000 crore extra for increased crude oil prices, which increases our fiscal deficit, and India's inflation will increase by 40 to 55 basis points. In the currency market, dollar index or DXY is at 97.14. Today's range for dollar index 96.90 to 97.30. In the USD CNY or Chinese yuan is trading at 632. USD INR Indian rupee with a low of 75.46 closed at 75.33. They didn't breach 75.50 on Friday. Resistance at 75.20 and support at 75.85 does exist. We expect the weaker rupee today. Trading strategy: the global geopolitical scenario has strengthened the dollar index, weakening INR. Increased crude oil prices, increased account deficit, increased inflation, all are pointing to weaker rupee. We are now eyeing 75.50. We were eyeing 75.50, but now even 75.75 is also possible. In the worst case scenario, we may see rupee approaching 77 in a quarter. In the domestic market, the retreat from August 2014 high in crude oil prices has given some support to the Indian gilts. For a brief period, we all saw $105 per barrel crude, and that was scary for countries like India. The gilt auction on Friday went smooth for the first time after 17th December 2021. If we talk about 25th February 2022 gilt auctions, GOI FRB 2028 at 519, 654 GS 2032, the new benchmark at 678, exactly the same auction points since when the devolvement started in December. 695 2061 at 701. The 10-year cutoff was exactly at the same point where RBI had started devolvement at 678 levels. With the positive auction, Indian bond prices also rose marginally. 574 2026, the 5-year closed at 601 versus 604. 654 2032 closed at 675 versus 676, cutoff at 678. 667 2035 closed at 699 versus 702. Kindly note that the Fed meeting is in mid-March and that will bring volatility with 25 basis points hike. So better to prepare your portfolio for the upcoming shocks. Trading range for 654 2032 seems to be 674 to 678. In the notable move, SBI Bank issued a 3-month certificate of deposit CD for the first time in a decade. Rupees 2,000 crore CD at 380, 10 basis points higher than a 91-day T-bill cutoffs. Rupees 3,000 crore amount for SBI Bank is negligible, but this gives the following two indicators. Number one, credit offtake is high and India's largest lender is testing the waters to raise debt in the future if the need arises. Number two, CD as an instrument which was out of flavor for the last many years will come in mainstream in next few quarters. You are already aware that as a research house, Knight Research is very much vocal about the use of second notch quality CPs, which is commercial papers, to yield higher returns for your non-SLR portfolio. You can also explore CDs now, given SBI is also interested to raise debt. That's it for today. See you tomorrow with the new episode from Night Snippets.